Trading with triangle patterns. When we trade with price action patterns, we must always wait for price breakouts before even considering to open a position in order to have the optimal entry point. By considering different standard types of the triangle pattern, we can execute our trades in two major ways. One, when the price validly breaks out of the pattern, and two, when price pulls back to the pattern after the valid breakout. In this video, you will learn about trading using both these ways. When we find an ascending triangle pattern on the chart, we need to wait for the price to break out of this pattern. We call the candle that breaks out of the pattern the signal candle, and we must wait for the signal candle to close. In the event that this candle can give us the proper cues, we can open a position, or we can wait for the price to pull back to this level and open a position after witnessing the signal candle and the closing of the entry candle. In order to place a stop loss, the perfect spot would be right below the previous swing low. However, if you've entered on a pullback, you can consider putting your stop loss right here instead. And in order to set your TP or take profit, you can use support or resistance zones in higher time frames since they have more validity. Or you can simply use the height of the ascending triangle pattern to gain an insight on the area where the price will most likely reach. In order to trade using descending triangles, just like the ascending triangle, you need to wait for a signal candle, and in the event of a signal candle forming, you can open a position after the entry candle has closed. In the next video, I will elaborate more on the attributes of the signal and entry candles. If you're a risk-evading trader, you can wait for the price to pull back to the triangle and then open your position. In general, you can place your stop loss slightly higher than the last high, or if you've entered on a pullback, you can place your stop loss right here. Please note that we place our stop loss in areas where if the price reaches it, our analysis would lose its validity, which would obviously indicate that we must close our position. And lastly, for setting your profit targets, you can use the triangle's height as a good measurement, or you may also use the support and resistance zones in higher time frames. When it comes to symmetrical triangles, since the breakout may happen in both directions, once you see the signal candle, you may get ready to open your position after the entry candle closes. Or you can also wait for the price to pull back to the triangle for a safe entry. And in this pattern, you can use the previous swings as the stop loss, or if you entered on a pullback, you can set the stop loss right here. And lastly, for setting your profit targets, you can use the triangle's height as a good measurement, or you may also use support and resistance zones in higher time frames. Now head on over to a chart and try to find triangle patterns and analyze them, or use TradeDesk to find countless triangle patterns live on the market.